Hello, everyone. Welcome back to the trading room here. This is our Switch Markets Live webinar series, and today we're going to be talking about Bollinger Bands. I'm going to show you how to get Bollinger Bands set up on your charts, and we're going to talk a little bit about the settings. We're also going to give you a couple of different ways to trade Bollinger Bands once we give you some background on what exactly the indicators are. We have two strategies that I really like the Bollinger Bands for. That's a breakout strategy and a trend following strategy, and I think both of them can really help you maybe engage the market with a little bit more, I won't say aptitude, but definitely with a little bit more confidence. And the thing about all these webinars, all these strategy sessions that we have, the Fibonacci's, everything that I like to do is just to get you thinking. We want to get you thinking out there. If you're a brand new trader, we want you to, okay, this is what a strategy is. This is how it would function. And then if you're a veteran trader and you're looking for maybe another way to approach the market or a different way to approach the market, well, maybe we'll look at Bollinger Bands. Maybe we'll look at moving average crossovers, whatever that may be. And that definitely is what these live webinar sessions are all about. They're also about answering questions. If you have any questions at all, be sure to ask. Today, our format's going to be very simple. I'm going to go through. We're going to talk about a couple of trade ideas that we have out there. We're going to talk about the big news events of the day. We're going to probably spend five, maybe 7 or 8 minutes on that. And then we're going to dive right into our Bollinger Band discussion and see if we can't find a couple of interesting trades out there using our Bollinger Bands. We're going to do breakouts and we're going to do trend following. So I'm going to brush on both of them. I'm going to show you how to do each of them. I think for breakouts, we may talk about the coastline trade, which is something that I talked about introducing on the last one of these live webinar series, but I got a lot of questions. Shane, what's a coastline trade? What's a coastline trade? I said, well, I'll show you what a coastline trade is if you guys are interested. So good to see everybody back in the How to Trade community here. Tuku, good to see you. Tuku, Dave F19, always a pleasure. Over in YouTube land, yes, sir, good to see you. Let me see. Hey, yes, sir, how are you? Just putting it out there. I would love another key levels workshop so I could pick the brain of Shane, absolutely. We're going to be talking key levels right now. About reading key levels and how to make a lot of money doing it is probably a workshop we need to have because we saw key levels in our metals markets that are absolutely fantastic. Absolutely fantastic. I haven't seen trading like this in our precious metals markets in a long, long time. Think about it, guys. We sat there all summer long waiting for gold to do something, and now there's been about 4 or 5 premium trades in the last 48 hours on that gold market, and they all have to do with 4,000. Right now we're selling off a bit. I'm going to show you a key level that I have in play right now here just very shortly. So I want everybody to be welcome. Feel welcome to the Switch Markets community. These live webinars are for asking questions. So if you do put a question either in the live chat over on How to Trade or on the Switch Markets YouTube channel, I will be sure to answer it in short order. If you want to trade anything that we're talking about today, be it strategy, asset, really whatever you'd like to do, be sure to tune in to Switch Markets over there at switchmarkets.com. We just had a big new tools section added. I'll probably touch on those at the end of the session here. I'll show you exactly where to find those tools, but a lot going on over at Switch, a lot of value back to the trader, and that's really the motto over there. So be sure to check that out. All right, trade idea. Let's go ahead with a trade recap. U.S. oil, those of you that know me know I love U.S. oil. I'm pretty much, I would say that's my bread and butter. That's what my specialty is crude oil trading. And I feel like we really nailed one with that 62, 64 sell. You can see right there, we're looking to sell 62, 64s. Let's go over here. Take a look at our U.S. oil market right there. Fibonacci retracement sequence, 62.70. We've also got a 13-day EMA at 62.45. And we've absolutely plummeted. Faded a little bit up here, a little bit of compression. And now we're getting the big break at this moment. And it's absolutely just a fantastic thing to see. And we went right down and hit our profit target, which was about 100 pips away. And that was down there, at 61, 64. We hit that easily. I do believe that our dump is coming. I've been calling for a big-time fall dump in WTI crude. Keep a close eye on 60. If you're trading U.S. oil, be ready for 60. Once we break beneath 60, we're going to go down and take a look at some of those prints, those 55 prints, those 56 prints. If we pull up our monthly chart, you can see exactly where we're going to be looking. I think that those areas are going to get taken out. Does it happen this month? I'm not ready to be that bold with a call just yet. But I do believe that we're going under 60 and it's coming soon. Once we get under 60, I do expect momentum to the downside. There's just a few things that we probably have to square away first. Number one's Fed policy. We'll talk about that probably more tomorrow on our NFP live stream, but we do have to cover a lot here today. So let me see. Bible Tales for Kids. Hi, Shane. Bobby Bob. Good to see you, Bobby. Welcome. All right, so that's a good look at that U.S. oil trade. I really liked that one. I thought it was a fantastic trade. Kiwi Aussie. This is another trade idea that we had out earlier this week. We're looking at 87. That 87 area is being potentially a very good bid. So I'd be looking probably anywhere from 87 to 87 and a quarter is a real nice bid in that Kiwi Aussie. That's 2022's low. I fully expect to get a bounce sort of off of that zone and one that we could definitely tune in and maybe grab a few bucks on. I think that could be a very lucrative trade for us as well. Once again, I'll probably hit on these again tomorrow. I don't believe this one's going to come our way today, but if it does, probably a safe play is 87.09. If you want to be hyper aggressive, probably 87 and a quarter. Something to think about there. All right, here's gold. This is sort of an order that I had up. I wanted to throw down and really show you exactly what's happened in the gold market. Talked a lot about 4,000 being sort of the downside support for this market yesterday. I said 4,000 is the bottom. And it really looks like what's happening here is just textbook markets, guys. Nice sort of compression here. Boom, huge rally up above 4,000, and now what's happening? You're washing out everybody that went long yesterday. We talked about it over and over again at our FOMC minutes release. You can't buy here. You can't buy here. You can't buy up here. Don't buy up here. Be careful up here. And we want to be long. We want to buy, but the question is where can we buy from? Well, right here, 38% is in play right now, 39.68. We're printing 63. We got a really beautiful bounce off of that level. If we just want to go to a 5-minute chart here, really a fantastic scalp. You can see we went down, and then we bounced right up to 74. So theoretically, you got a pretty good little scalp right there off of our key level, which is right around 68. You got about a $6 bounce. Now we're starting to trend a little bit beneath that level. I would be careful. But right here, I threw down a nice market order just because I wanted to get into this trade and sort of monitor this as the stream rolls on. But you can see right here, we are coming off. This level's under serious pressure. It's under serious pressure, short-term pressure, but it is in the oversold territory. I sort of expect this thing to bounce back and trade back up to 4,000, but how we get there, I don't know. I genuinely don't know. So if you aren't already long this market, one last thing I wanted to cover about 4,000. Beautiful stuff here. Absolutely beautiful pullback right there, right to 4,000, 4,001. And there was sort of your big rally right there, just a few minutes back up to 4,036. Then you came down, you tested it again. Your low right there was 4,002. And then where did we rally? We rallied all the way up to what? 4,057. Man, I'll tell you what, that's absolutely fantastic stuff. When you're talking about scalping, you're scalping a key level, right? So you went down, we hit that twice, and then the third time, what happens? We blow it out. That's always remember, guys, those key levels, everybody listen up. Those key levels are going to be valid, but they're only going to work for a specific period of time. 1 test, 2 tests, maybe 3 tests. Personally, I like the first test. That's what I'm interested in. I'm not interested in how it holds up the second time or the third time. Remember, the more those levels get traded, the more those orders get eaten up, and it's really, really difficult for one key level to last the test of time. So I do expect us to trade back up over 4,000, but right now we're seeing some sweeps and really what you would call a bull trap. Everybody was buying in yesterday because it was euphoria. Oh, we're going to 5,000. Oh, it could happen fast. Yeah, but that's not how markets work. Markets pull back and they knock the retail traders out. Happens almost every time. So I'm going to watch that position as we roll forward here on this live webinar. Last market that I want to cover here. I don't have a crystal ball. I got asked earlier. I've been talking a lot about silver, and I was talking about 50 and how normally, okay, let's step up and sell the ranch right in front of 50. And I said, no, not this time. And the reason why was an all-time high right there at 49.81. We knew that was going to get washed out. Take a look at today's spike. Today's high went up to 51 and a quarter, and now it's reversed down to 48.80, and it's falling. That's a huge range. That is absolutely indicative of a big spike, an absolute big spike in volume, all right, knocking out all the shorts. I mean, there was a lot of retail shorts loaded up. There was a lot of institutional shorts loaded up, and their backs were against the all-time high, and their backs were against 50. And that is a situation that we don't want to be any part of, because the way that silver's priced, unless you're Goldman Sachs, unless you're JP Morgan or Citibank, you're not going to be able to hold the 51 and a quarter. You're not going to be able to hold that kind of draw. That's really hard. So that's an expensive trade to take. But now, if you were short, maybe from up here you did okay. For me, it's all about 50. It's all about 49.81. We sort of predicted that could be a really ugly break. We could have seen a really stiff break, something that happened fast, and you bet it did. There's no money there. We already got our money. We're down here. We're looking to buy pullbacks. I'm not worried about that in silver. But take a look at what happened right at 50. Okay, there's your all-time high. 49.81. It was established back in 2011. What happens? Clean break right up there to 49.87, and then we're off to the races to 50 within just a few minutes. All right, what happens at 50? We trade sideways, bang, and we are off to the races. And once we're off to the races, there's no mercy. That wave right there, this is a 1-minute chart. That wave right there above 50, people lost millions. There are retail traders just like you that blew out their live account, that probably have to sell their cars, that have to probably go in for another evaluation account if they were prop trading. There was a lot of shorts there from 50. Now, honestly, if we were short right here, we'd say, this looks like it's topping out a little bit to us. Compression. And then the hammer came. And the hammer came because you're going to squeeze all the shorts out of the market. It's a short squeeze. It killed all the shorts, guys. We called that one right. That was a very, very intuitive thing that we did. Now, staying out of that market to the short, very important. Then we come right back down to 50. 50 sort of acts as support. We get another big run. You'll notice the volume starts drying up. And then what right here? Now we're just sort of plunging. We're in plunge mode. So if you want to trade silver, you probably back off to, say, a weekly chart. Can we get a good pullback in silver, something that we can make a lot of money on? Spike low there. Spike high there. We're looking at 45s or 46s. We could get there fast. This is a major sell-off right now. Major sell-off. But remember, it's just because of the pressure that's generated at 50. I'm confident nobody that watches these live streams got caught up in that mess. Those are messes. Those types of traps right there will end your trading career before it ever begins. And I know I'm being dramatic, but it needs to be said. Watch yourself on those. Don't get too caught up in those. Those are ones that we don't necessarily need to win. There's a lot of other great trades out there that we can win. We don't need to win that one. Let's leave that money for somebody smarter than us. All right, Team Marina, good to see you. Team Marina, welcome. All right, Andrea Garwell, good to see you. Andrea Lita, always a pleasure, guys. If you have any questions at all, now's the time to ask them in our live stream, live webinar. Okay, 2 news events, and then we're going to get on with the Bollinger Bands trading. All right now, government shutdown. We are just waiting for these people to vote no again today. It doesn't look like that the Senate's going to get anything done here, passing a stopgap measure. I'm going to come on live tomorrow again during that NFP period, just in case we get a deal during the overnight. I have to be ready. I have to plan just in case they drop those NFP numbers tomorrow. So I'm going to be there. So I'll be there 10 minutes ahead of NFP, and we'll run through the economic data of the day. We'll look at some key events and maybe some key markets, anything you guys want to look at, and take live Q&A. Whatever you guys want to talk about, feel free just to sort of fire away. That's for sure. This is another thing that's been getting more and more traction right now, and it's called the Insurrection Act of 1807, and essentially this would put military on the streets of certain areas in the United States. There's a tremendous amount of unrest here. Tremendous amount of unrest. And the media coverage, as you can see, is pretty crazy. I don't listen to much in the media. We make our own news, right? Everybody does now on X and YouTube and whatever else. But this right here is something that's developing. We're going to be looking at this Insurrection Act over the weekend. In my view, it's one of those reasons why gold is where it is, trading as high as it is. So definitely something to take a look at there. That's a big-time news event that we're going to be talking a lot about in the coming weeks. As far as what we have for right this minute, we've got non-farm payrolls tomorrow. Jay Powell is due to speak today. I don't believe that he's going to say much of anything at all, so I would mark that as a secondary event. I wouldn't really worry too much about it. What we're looking at now is going to be our Bollinger Bands. Now, I want to get started with these Bollinger Bands. I ran a little bit long breaking down those markets and everything, but there is a lot going on right now. So these are a couple of old videos, and I'm not really promoting these videos so you go over there and take a look. I'm just showing these as supplements. These are sort of supplements to what we're going to talk about today. So the 2 Bollinger Band strategies, that was one of the first videos that I ever made on YouTube. That was a long time ago, but it really does show you 2 ways that you can trade the Bollinger Bands, a breakout and a trend following. And we're going to go ahead and I'm going to show you both, and we're going to do it on short time frames. All right, and the second one is Master Bollinger Bands, the complete tutorial. That is from the inside of our academy here. We also put that out on YouTube as well. So if you want to find it on YouTube, great. If you want to check out Bollinger Bands, come on into the How to Trade community. Check out our Trading Academy. There's a tutorial on Bollinger Bands, and that's a longer video of about 20 minutes. It's a complete synopsis of what Bollinger Bands are. It's a deep dive, and then also how potentially to trade them. So if you want more on Bollinger Bands, feel free to check that out. Now, so what are Bollinger Bands? Let's see. Joshua Chung, good to see you. Joshua, welcome. All right, What are Bollinger Bands? Bollinger Bands are a price envelope that measure pricing volatility. Essentially what they are is you've got a high moving average and a low moving average. When taking in concert with themselves, that's an envelope for price. The price exists within that envelope typically. Now, they measure pricing volatility. Remember, relative pricing volatility. It's not necessarily a standalone view of pricing volatility. It's volatility in concert with other with previous levels of volatility. Always remember that Bollinger Bands are relative. They depend on past pricing data. So volatility over here, we're going to be looking at volatility right now compared to what the volatility was. And in that way, we can see that if it's dying or if it's growing. More on that in a second. It's easier to show you than to read these things to you, but it's important to understand what they really are. A lower price range. So Bollinger Bands define an upper and lower price range levels with an upper trend line and a lower trend line. That's it. That's all you have to remember. Now, they also have a middle trend line, which can be important in some trading strategies, but we'll take a look at that as well. So what do? They measure pricing elasticity, they identify market state, and they define trading ranges. Basically, they tell us what the market's doing. The history of Bollinger Bands, created in 1983 by John Bollinger. He still has a website. Just go ahead and Google Bollinger, and there's all sorts of tools and things. I'm not going to sit here and push and tell you to buy Bollinger's book or anything. I've read it. It's interesting, but this is one of the tools that I was first taught to use when I entered the market in 2011. They still hold a tremendous amount of weight with me, and most of it is just being able to tell what the market is doing. I find that information invaluable. So calculating Bollinger Bands, get out your pencils and papers. Let's do some heavy mathematics. Don't worry, you don't have to do math. I was told there would be no math. I'm not very good at math at all. I can do arithmetic. I can add and subtract in key numbers and count my ticks and pips. That's what I can do. As far as all this stuff goes, this is the Bollinger Band formula. All you need to know about any of this, it's complex, deep mathematics. All you need to know about this is an elegant way of averaging values. That's all it is. And that's basically how your upper and lower trend lines are developed. They essentially are moving average. They're moving averages, essentially, is what they are, but they're very, very in-depth, intricate. I'm not going to get into it because I don't really see the value of learning how to do any of that. And I know that sounds stupid, but we're traders. We're not mathematicians. We're traders. So we've got good news. Functionality is automated. You just add the tool to your chart, set up your settings, and it's going to calculate those lines beautifully. Inputs, we're going to look at a chart. You can go on any time frame on any product. We're going to look at some really, really tight time frames and get involved there on a number of different ways. Source, open, high, low, close, medium. That's going to be key for us as well. We want to understand exactly which price points we're using in our Bollinger Band calculation, and that's going to be the source. Standard deviation, a degree of elasticity. Now remember, a standard deviation sort of gives us an idea of what's normal and what isn't. The more standard deviations a specific result is away from, say, a mean value, that's the more unlikely it is. So when we see those Bollinger Bands get very, very wide, it's representative of potential pricing with respect to a constant standard deviation. I know I told you there would be no math. You don't really need to know that, but you need to know what standard deviation is, because essentially as you widen the standard deviation, it sort of flattens out the Bollinger Bands. You don't want that. You want to have a nice, really sweet setting, and I'm going to show you a couple settings that I've had very good results with. So that essentially is what we're looking at here. I mean, we're looking at really a system of trade that is sort of what it is. It's all this complexity, and what at the end of the day, what does it do? It helps us trade. It gives us two types of strategies. It gives us a trend following strategy, a reversion to the mean, a breakout. Today, we're going to look at breakouts and trends. Last time we looked at reversion to the mean. A lot of folks love those strategies. I'm looking at breakouts today because I think it's a pretty fun way to trade. A lot of people really like to trade breakouts and trends. So let's go ahead and do it. Okay, guys, let's get right out to price action here. This is a good look at your Euro USD market. Right now, we see the US dollar making a run against pretty much everything. Gold is absolutely in the tank right now. Silver's coming off big as well. Euro USD coming off a little bit. Dollar index is up about 0.75 of a point. So that's just sort of a quick update. We do have a mover here. Euro USD is coming off big. So what can we do? What do you want to do? In order to trade Bollinger Bands, we've got to set them up, right? So the first thing we do here on TradingView is go up to indicators. Click indicators, and you're going to go down to Bollinger Bands. Go ahead and give Bollinger Bands a click, and there you've got it added. Now, I'm going to show you my own secret sauce in my factory, my settings. Now, I know there's probably some of my old partners watch some of these webinars, and they're going to get a little bit upset that I'm giving away, hey, those are our settings. Nobody knows about those. And I go, listen, this is a public domain indicator. It's available on every platform out there. If you want to sue me, go ahead and sue me, but this is a public domain indicator. Our settings are what they are. They're not really anything special. And right here, let's go over the settings, and then I'll show you how to add this to MT5. So our inputs, very important. Your length, 24. These are the ones I use. I use 24. What type of moving average do you like? A simple moving average, an exponential. I'm a big fan of exponentials if you've seen any of our videos. So I'm going to go with an EMA. A source, high-low divided by 2. I like to build mine on the midpoint of the pricing bar. That's what I like to do, but you can use open, high, low, close, whatever you'd like to do. I like the mid. A lot of people like thirds or quartiles. For me, the mid is pretty much everything. Standard deviation, 1.9. I like 1.9, but notice what happens when we sort of move our standard deviations. You'll notice that, boom, let's say we kick them up a notch. What happens? They get wider. Is that good or bad? You know, it can limit you in a lot of ways. You need to find a way to really get a Bollinger Band setting that illustrates price action accurately. I found 1.9 to be the best one for me. But listen, we can go down to the defaults, and we can just go ahead and reset settings. And what do you have right there? Here's your default settings for Bollinger Bands. 20, SMA, close, and 2. So if you want to work with the defaults that John Bollinger did, go ahead. There they are right there for you. You can do anything you'd like here. Definitely don't feel hemmed in by mine. I've just sort of... I don't know. I've grown accustomed to mine. Let's put it that way. All right, MT5 is a little bit more involved, but I wouldn't worry too much about it. You've got a situation here where we've got a big, nice chart. You've got a huge move in the Great Britain pound USD. We need to get trading. Okay, so right here, insert. Let's go ahead and click insert, top of your MT5. You're going to go to indicators. Indicators right down to trend, and you're going to go where? To Bollinger Bands. Give Bollinger Bands a click, and then here's your window right there. We've got 24, 1.9, median, which is the high-low divided by 2, and then you can pick whichever color you'd like. Let's just go with sea green, and we'll go ahead and put that on your chart. So essentially, that's what you're looking at. It's very simple to get these things set up and ready to go. They're public domain, which means they're going to be pretty much on every platform you use. So you're definitely going to want to check those out if you're interested in Bollies. Okay, for the ease, sort of my demonstration here, I'm going to go back and put on my Bollinger Band settings, which are, in my opinion, the best. But that's just my opinion. Doesn't mean that I'm right. High, low, close, standard deviation 1.9. 1.9 is interesting. I like 1.9 a lot. Style right there is what do I want here? I want white lines. I want white lines on my charts. Let's see. Is that my midpoint there? That's my basis. So I'm going to go ahead and rock red in the middle. That's going to be what I call the 50-yard line. So we're going to go there. We're going to go with our upper. Upper is going to be white, right? And then our lower is going to be white as well. So there we go. Now we're set up, ready to rock. Okay. 2 ways to trade this thing. First one is going to be what? Is going to be trend. So let's go over a few ways that we can trade this from a trending perspective. There's one in particular that I like, and we're going to take this down to a 1-minute chart, and we're going to take it accordingly. We're going to take this on the Euro USD, which is on the move. So the goal is very simple. We want to join prevailing bullish or bearish price pressure, and that is the name of the game. So if we're looking for a trending market, all right, I have a 1-minute chart right here that really is sort of flattened out in a big, big way. If I want to trade a trend using my Bollinger Bands, I'm going to be looking for a breakout. I'm going to be looking, and don't get confused here, for a breakout, but when I trade trends, I want 2 things to be present with my Bollinger Bands. Number 1, I want the lines to have a slope. I want my Bollinger Band to have a slope. It could be a positive or a negative slope. This right here is going to be sort of a negative slope because we're going to look to sell the market. Now, this is a very, very good illustration of what a trend trade with the Bollinger Bands would look like. Number 1, we've got an area right here with very, very tight Bollinger Bands. Now remember, when Bollinger Bands are tight, that means the market's flat. When they open up, that means there's volatility. We want to look to trade trends when the market's open like that, when our Bollinger Bands are open. So right here, we have a situation where we're going tight. Okay, we broke up here. We sort of meandered a little bit here. We failed on this breakout. Theoretically, we could have bought right there and stopped ourselves out, okay, and had a chance maybe to get in on the reversal. But we want Bollinger Bands that have a slope and are open. So that right there probably would have qualified as a trade. It just would have been a loser. We're on a 1-minute chart. We wouldn't have lost very much. Now, when we come back down here, this is really a beautiful trade because your Bollinger Bands, they have some space. They've opened up a little bit. Now we're starting to see that line slope. So my entry point, I want the first price bar that closes outside of my lower Bollinger Band here for a sell, and I want to take that trade when the bands are open and there's a slope to the line. So let's go through our checklist of trades. Number 1, what are we looking at? Bollinger Bands, are they open? Yep, we're open for business. We're not tight. That's a very, very tight one. We don't want to take that trade at that point. We're open. We're ready to go. Number 2, do we have a slope? We're starting to get one right there. Slope is when that line goes down like that. We have a negative slope. We're falling away. That tells us that the pressure is down. Okay, what am I looking for now? I'm looking for a bar close. Right there. Where's our bar close at? There's your entry. You're going to sell right beneath. Boom, you're going to sell. You're going to play that bearish action. Now, this is easy to do in retrospect and hindsight. Very, very easy to do in hindsight. So what do we have? What can we do here? There's your sell. Where should my stop loss be? 1 minute chart. You could probably get away with putting it at the top of this move here and try to grab some to the downside. You could probably do that. On a bigger chart, let's say like a 5, 10, or 15, 30-minute chart, you're probably going to look to go right above the trigger bar. And the reason why is if this thing reverses, if that Bollinger Band, that lower Bollinger Band acts as downside support, you don't want to be anywhere around. You want to scratch it and go on the hunt for another big move. Now, of course, timing is going to be very important when you're trading this on short time frames. I would definitely recommend on Forex pairs, London-US overlap. If you're going to trade commodity futures, probably right after the U.S. Open or during the U.S. session. If you're going to be trading the Great Britain pound, probably right after the London Open, something like that. But this right here really illustrates exactly how you would take the trade. So just to, for the sake of argument, there's going to be sort of your trade. If you wanted to do something like this, you know what I'm going to say? I'm always recommend at least a 1-to-1. So something like that, 1-to-1. Or you could go big. You could go 1-to-2, 1-to-3 because this is a trend trade. So if you wanted to go, say, 1-to-2, something like that, then your profit target's going to be down here. Did you win? Not quite, did you? Looking for a 1-to-2, something like that. Didn't get it. But let's say you were going to put your stop loss right up above that trigger bar. Now, are you really going to be trying to rock an 8-to-1 there or something? No, you're probably going to be looking for a 2-to-1, maybe something like that, maybe a 3-to-1. Those trades all worked. Something like that. It's interesting because these trades can happen fast. And I knew a trader right when I put that first video out on Forex Signals. The gentleman really wanted to trade NASDAQ futures using this strategy on a 1-minute chart. He wanted to do it every day. And I said, man, you got to really be careful with what you're doing here because that's probably the most volatile market in the world, it feels like. And you can make a lot of money, but you can also lose a lot of money. And eventually it turned into just sort of a win a trade, lose a trade. And the reason why the success wasn't really there was because the profit target was always being skewed. Now, he was very good at setting a stop loss. He was dedicated with that. He says it goes right above the trigger bar, and that's the move I'm looking to get. The problem he was having in his own mind was, okay, should I shoot for 1-to-1s, 1-to-4s, 1-to-5s? What should I do? And if you're always changing that, you will always be one step behind the market. You've got to make a decision. You've got to go with it. Okay, let's see if we can get one of these trades right now. Let's go to the, yeah, I mean, this is sort of like playing blackjack. I mean, if you're a gambler, I mean, this is what it is. So let's start our trading session right now. Remember, it's always difficult to get one of those times. It's always difficult to start. You've got to figure out when you're going to start trading in the morning, whether it's an hour before the open or at the U.S. Open, something like that. We're going to start right now just for the sake of argument and to get something going. Okay, we're going to have a sell right here. We've got 14 seconds. If we get a bearish close, is this a trade for us? Absolutely. The Bollinger Bands are open. There's plenty of distance between them. They're also sloping to the downside. I want to take my sell, and I want to just go ahead and rock this thing. We just need a close beneath the lower Bollinger Band. Did we get it? No, we didn't. No, we didn't. We got to close back up inside. That kept us out. Very, very important. Listen, our close right there is at what? 25,179. What's our lower Bollinger Band right there? 21,179.69. Close is 129, or excuse me, what was the close? 125 or 25,179 and 3/4. That's not good enough. You need to see a close that's definitive. Something like that. Something like that. Okay, so right here, we're waiting 32 seconds. If we get our close outside of the lower Bollinger Band, we'll take the sell. Stop loss is going to be right above this, and we're going to be looking probably to rock a 1-to-1 or a 1-to-2. We'll see. 1-minute chart. This is high-impact scalping, guys. This is what it's all about. Things are happening fast. You have to be incredibly observant, and you have to be on your feet thinking well. I mean, you need to be dialed in for this unless you have it sort of automated. So right now, what's happening? Price is rejecting our lower Bollinger Band. These are the types of trades you want to avoid. You want to wait until you get a break and a close beneath that level. Now, Do we wait another minute, or does price rotate back up in there? Looks like it's going to rotate up. If we get a bearish close down here, then we can look to take the trade. 50 seconds, 40 seconds. It doesn't look to me like we're going to get it, but we may get it. Okay, now we have a chance. Now we have an opportunity potentially to sell this thing. 43 seconds. Okay, now we're talking. This is turning out to be a pretty good setup. Now, the reason why, your Bollinger Bands are far apart. The slope is negative. It's not flat. That's very, very important. The slope has to be present. If it's not there, then you're going to run into trouble. So what's happening? Our lower Bollinger Band is acting as downside support. These are situations we want to see that support break. As soon as it breaks, that tells us that the market is going to fall away and it's going to run in our favor. That's the key. That's our filter. So we're watching closely. We need to get that negative close here. We need to get a close beneath the lower Bollinger Band, and then we can get in on the trade. If we don't get it, we can't take it. And we're going to give this, I'm not going to give this another minute. We've already waited 2 or 3 minutes on it. All right, maybe one more minute, because I think it's going to get us in there. But right here, if it does, in fact, give us an opportunity to sell, then we could definitely sell the market and feel pretty good about it. So that's sort of what we're watching. All right, we'll give it 45 more seconds. Why not? 43. We've come this far. We've already waited 3 minutes, right? And this is trading, guys. This is it. I mean, this is what you have to do as a trader. This is what you do. You wait for your setups, and then you get them. It looks like right now we may get this setup, but we've also seen this for the last 3 minutes. Take a look at our tails. Look at what's happening with our tails. We're getting these tests, and then we're rotating back up in, and that sort of tells us that, yeah, we are moving down a little bit, but it's not necessarily as strong as it needs to be. So right here, we're watching closely. Are we going to get a chance? 14, 13, 12, 10, 11. It doesn't look like we're going to get a chance again. If we get that negative close, I want to take a trade. I know you guys are ready to take a trade. Okay, maybe there it is. Of 5, 4, 3, 2, 1. Are we going to get our negative close? It's not good enough. Those tails tell us that a reversal can be in the play. It's not good enough. So right there, I showed you exactly how we would look to trade. We were looking to get short down in here. That would have been the indication that price is going to jam for us to the south. It didn't happen. It absolutely didn't happen. So there you have it. Okay, there's one other way that I want to show you to trade these things, these Bollinger Bands, and it's called a breakout. What I'm going to do is go over the concept of a crossover, or excuse me, a coastline trade right now. So a coastline trade, this is going to be a breakout. We're going to be looking for a flat market, and we're going to look for a directional move outside of the flat market. Now, this can be a little bit tricky to do. You need to be patient with this one. I feel like the trend strategy for the Bollinger Bands is relatively easy. You're just waiting basically for the Bollinger Bands to open up. You're waiting for a slope, and you're waiting for a close outside of the Bollinger Bands to buy it or sell it. This one's going to be a little bit more difficult. Now, a flat directional market. There's a couple of keys we're looking for. Number one, we're looking for flat Bollinger Bands. We want them as tight as we can get them, really. But if we have a tight pair, that means that we're not opening up. We're not showing the volatility. The volatility is sort of relatively constant. All right? And those Bollinger Bands, the upper and the lower, are going to run parallel. That's our setup. All right, let's go ahead and look at this. Okay, this one's on the move right here. Let's find something that's flat, that's sort of dead. You see, we didn't get it. See, thank goodness we didn't sell down there. We would have got chopped up. All right, what do we got? Give me something that's flat. Pretty much everything's on the move right now. Let's go Great Britain pound USD 1 minute. Let's go US dollar Japanese yen. All right, this is relatively flat. Let's adjust our time frame. Let's back this off to a 5 minute. All right, beautiful thing. Okay, now you can see this isn't the best example because those markets are starting to move down just a little bit, but I'm not overly worried about it. Okay, this is called the coastline trade. Let's see if we can find a decent way to put this. With a coastline trade, it's like looking down a coast. I know a lot of you live on the ocean, or at least a lot of you have been to the beach or at least the coastline. And there's a couple of big ones here in the United States. You've got the East Coast and the West Coast, right? Well, as you're driving down these coasts, typically the sea sort of goes in and out, meaning there's a real jagged edge to most coastlines, unless you're on, say, a great big long beach in Hawaii or the Caribbean or something. But even then, you can see rock outcroppings, and you go in and out, and it's a very jagged thing. Coastlines typically are very jagged because of the way that the water hits them, and also the constitution of the Earth's crust, right where the rubber meets the road, right? Well, this is the same type of a concept. It's an idea that we're looking for a very jagged pattern with a certain amount of tests on each Bollinger Band, and then we're going to look to go either long or short and play the breakout. So the best way to do this for me is I take this right to a line chart. You don't see line charts used very often. Well, here's one way to use a line chart. I've got my Bollinger Bands set up. All right, they're ready to rock. I got them dialed in. I'm ready to go. My lower Bollinger Band and my upper Bollinger Band. What I'm looking for is a set of tight ones that are as close to parallel as I can get them. And you can see right here, you've got relatively parallel Bollinger Bands. It's nothing like this, where these are sort of, I mean, theoretically they're parallel, but they're directional. Something like this would be even better. Now, they're not going to be perfectly parallel, ever. But what you're looking for is an extended period where they are relatively flat. And the idea here is very simple. It's to play the breakout. Okay, so if we're going to play a breakout, what am I talking about? I'm talking about hard tests of price against our Bollinger Bands. Okay, now look how jagged this is. We come down right there, bang. That's one test right there. We hit the Bollinger Bands, we pull back. The midpoint, we'll get into that some other time. There's lots of different ways to trade the midpoint. We come right back down, bang. That's number two. That's two tests. See how our coastline's sort of setting up? Think of the ocean out in here. And there's your coastline. So like there's your highway and you're driving down the coast. Well, what happens on that third time? Now, if you've watched the trend line touch, 1, 2, 3. We're looking for a third test. 5 minutes, right? A 5-minute line chart, you're going to get a close potentially outside of your Bollinger Bands. If you get that, then we're looking to sell. So the idea here is very simple. The lower is downside support. It can't hold up forever. It absolutely can't hold up forever. There's one test and a retracement. There's two tests and a retracement. This third one, if it tests and closes back up inside, we have no trade. But if it closes outside of that lower Bollinger Bands, we're going to get in on the break. And what are we expecting? We're expecting this to come down, our lower Bollinger Band. We're expecting this to go up, volatility to increase. That's what a breakout trade is. We're looking for action before there's action. This is a pretty good setup. This isn't a bad one. So if I was going to take this trade, and let's just say, let's draw it up right here. Let's take a short trade. Let's say I get my close here in 3 minutes, 23 seconds, and I get a close right beneath that lower Bollinger Band somewhere down in here. Okay, my stop loss is going to be right up above your previous peak, right in here. Probably going to be above that price bar if you wanted to go to candles, something like that. So you're going to be right in here somewhere with your stop loss. And now this is a breakout. Now, I love one-to-ones. You guys know me. You know what I like to do, one-to-ones. If you're going to play breakouts, at least a 1-2, at least. Maybe even a 1-3. Why? Because you're really not risking very much. Take a look at what we're doing here. We're looking at risking, what, 58, like 8 pips, something like that. So we're looking to grab a runner, maybe a 20 or 24 with a nice little position. That's not bad. That's not a bad way to do business. Now, of course, if you're on a daily chart or a 4-hour chart, which is something that I would definitely recommend for Forex, a 4-hour coastline trade, you might want to dial this in a little bit different. You might just want to shoot for a 1-to-1. It might be worth it to you. But a 4-hour chart, something like this, you'll notice you really don't have any clean breaks. You don't have a third test on that. I don't see any. Potentially, you'd say, oh, what about right up in here? No, because there was your break, and you didn't have the test. It just broke clean through. Something like this, you'd say, okay, there's one test, there's two tests. I know that we're sloping, but still we're looking to get on a breakout because we're still relatively tight. But then when we open up, did we even have a chance to get into this one with a breakout? No. Maybe how about a 30-minute, something like this? 30 minutes interesting. Did you have a way to get in down here? Not really. You didn't get the tests. In a perfect world, bang, you'd have that one, that one, that one, and then maybe that one. Very, very difficult there, though. So if you wanted to trade short time frames, this probably would be the strategy for you. Intraday time frame, what do you have right there? One test, two tests, potentially a third and a short. So that's a coastline trade. That's a breakout trade using your Bollinger Band. So we covered trend trading and breakout trading. They're very, very diverse tools. I mean, they're flexible. They give you strategic flexibility, which is pretty much unparalleled. It gives you an ability to trade flat markets. It gives you an ability to trade trending markets and really anything else that you want to do. That's one of the reasons why I like Bollinger Bands. Now, do I trade Bollinger Bands in that fashion? No, I don't. The reason why is I use them to spot market state. I know when they're tight and parallel, the market's flat and it's not moving. I need to adjust my strategy accordingly with my Fibonacci's and my moving averages. All right, that's the first thing that I use it for. And I know when the Bollinger Bands are open, there's a lot of elasticity. There's a lot of opportunity to trade. And that's probably when I want to be in the market. That's about all there is to it, guys. See this stuff right here? You don't get caught up in that. You don't want to take those trades when you're right on the line, especially if you're playing a breakout. It needs to be obvious. There you have it. All right, everybody. I want to thank you for joining me today. It's sort of an interesting look at Bollinger Bands. I got a lot of demand, a lot of requests for a Bollinger Band tutorial. That is a pretty good look at how to trade trends and breakouts. That's for sure. All right, we have some questions here. T Marina, is anyone having issues hearing Shane? God, I hope not. Shane, audio is going in and out. Not sure if it's on my end or not. I'm showing pretty good. I'm showing pretty good stuff here. But you know, we could be having technical issues. It's always possible with YouTube servers. I don't know if you guys can hear me now or not, but if not, I don't know, probably just check out the replay maybe, something like that. All right, everybody, I'm going to go ahead and sign off for now. We're going to be back tomorrow with NFP Live. Hey, Universal, good to see you. Any way to get the transcript? I think on YouTube you can just click transcript now. I think they have that feature. Yeah, I think, I don't know, my levels are showing pretty good, Team Marine. It might just be on your end. Just watch it on replay. I think we're being recorded in pretty good shape. One last thing I want to show you guys before I sign off. Tomorrow we're going to be back for NFP Live, although I don't think that what we're going to get, I don't think we're going to get the numbers. There's been a whole bunch of new tools over at Switch Markets, so go ahead and just go ahead over here and click. You're going to want to click on Resources, and that's going to give you a chance potentially to access some of our new tools. This screen doesn't really show us what we need to see, but you go over here and you click on Resource. That's Accounts, of course. But you want to click on Accounts. You want to go to Resources right here. Give that a click. And we've got all sorts of stuff here, all sorts of new free trading tools that just dropped. You've got your lot size calculator, your economic calendar, currency strength, market heat map. We've got a lot of these things. I'm probably going to be doing some demos in the near future, but like we got a VWAP calculator, a win rate, drawdown calculator, pretty much everything you need to manage risk. Forex market hours, that's a pretty good one. This is a good one. The time zone converter. I definitely want to check this out because if you're watching me, you're not in the Mountain Time Zone more than likely. You're in some other time zone, but this can really help you get up and running with the different sessions and the different times to trade. And also, I believe on some of these tools, there is a free EA that you can download. You can download these and integrate them directly onto your MT5 platform. So definitely check those out. All right, everybody, that's a wrap. We got a lot going on. A couple of things. Government shutdown first and foremost. They're not going to vote to reopen the government. It doesn't look like just yet. That's probably going to delay our NFP numbers, but I will be here. I will drag myself out of bed at 4:30 in the morning and start getting prepped and ready to go. And believe me, if NFP drops, then we will be ready. So be sure to tune in for our NFP Live tomorrow for the second week in a row. I don't think we're going to get any numbers, but we got to do it anyways. That's part of being a trader. And then remember that Insurrection Act. A lot of people believe that that's coming our way in the next couple of weeks. I don't necessarily know that to be true just yet, but we got to wait and see. A lot of scuttlebutt. I'm hearing a lot about that, and that suggests that domestic unrest and uncertainty, that could really be a challenge for our markets as well. Right now we're seeing some bearish price action. I really love the opportunity, though, potentially to buy a pullback in gold. The gold's been interesting, that pullback that we showed you a little bit earlier. Trading to the red just a little bit here on the 5-minute, but definitely, I could definitely see this bouncing back up to 4,000 by the close. I could see that happening. So I'm interested in being long, not short, but a better trade location. If you're looking for a level to buy gold and you're not into the market just yet, a better trade location, 62%, somewhere right around 39.11, 39.12.50. That's probably going to be coming out in a trade idea a little bit later today. But that is a fantastic area and one that we would be remiss if we didn't hit. Personally, I still think 38 is going to trade much higher in the short term. And remember, these are demo dollars. These aren't necessarily not necessarily real money. Okay, everybody, that's a wrap for right now. I'm going to go ahead and sign off. I've gone long enough. Hope you enjoyed the tutorial on Bollinger Bands. It's just designed to get you guys thinking and maybe I'll use Bollinger Bands. Well, man, I like that breakout strategy, or maybe I like that trend following strategy. Feel free to do that. Full disclosure, I was shown that trend line, that coastline trading strategy. I was shown that back in 2010. And it always stuck with me. I said trend line or coastline trading, a coastline trade, but it can be very, very good. You just got to get dialed in on the proper time frame and be patient. You got to wait for that third test, guys. You got to wait for that third touch. The second touch, sort of the same idea as when 4,000 broke today in gold. One touch, beautiful. Two touch, beautiful. Third touch, boom. And that's pretty much what trendline reversals and key level reversals are all about. We'll get onto it. All right, guys, that's a wrap. I'm going to go trade. I think there's a lot going on, and I think there's some intraday scalps that are going to be tasty a little bit later on today. So if you guys need anything, head on over to howtotrade.com. Send me a private message. I'll be sure to get back to you in short order. Feel free to check us out all over on YouTube, Forex Signals TV, How to Trade Calm YouTube channel, and also the new Switch Markets YouTube channel. Pretty much all of our new content. We've got a couple of YouTube videos that are going to be dropping there relatively soon. Be sure to check those out. And then also you can always check me out. You can check us out on How to Trade on X, or you can check me out on ShaneV_Trader on X. I post trade ideas and analysis there pretty much all day. All right, everybody. Thanks for joining me. Trade the action well, and we'll talk soon. See you.